Hey everyone, Andrew Eppes with Nexus Advisors. I'm here with my partner Holly Clapp. How are you doing today, Holly?
Hey, I'm great. How are you, Andrew?
How you doing? Great. But today we're here to talk about financial freedom. And sometimes the word that gets a little controversial and some people don't like, it's called retirement. I'm not a huge fan of that, but it's kind of the word in our business that we're saddled with. Everybody pretty much knows what that means, but I think everybody has a little bit of a different idea about it. But the problem that we're going into today is really about what does it look like to be financially free in your business? How much does your company need to sell for, or how much do you need to spend, or what are the how do we come up with the idea of when are we financially free when we're not necessarily like the person who is just saving money for retirement in those traditional accounts, but we're building real wealth inside of a company. So Holly, I wanted to first ask you to help us define. I want to jump in on this too, but I want to hear you define, like, how do you define financial freedom? Like, really, what does that mean to you?
I think financial freedom really ties in with how do you stop trading time for money? Because whether you're an employee somewhere or whether you own a company, if you have to show up every day to make sure that that paycheck is continuing to you, you're not free.
So I don't have the assets that I would need to just live on indefinitely. I have to go to work in order to pay the bills for some amount of time.
That's right.
Okay. All
Exactly.
right. All right, very good. No, I look at it a very similar way. I don't necessarily like the word retirement because people they had started attaching things to that, like sitting on their couch and watching TV, like going and playing golf all the time, like never working. But really, it's really different for everybody. I mean, you could transition to the next phase of your life. You could still be active. You could still have a vocation or even another career and quote unquote be retired. And so I just like to take away the negative connotation of that and really redefine it to the point where you have enough wealth that you could stop working tomorrow and you could pay the bills for the rest of your life. Like, that's really what we mean by financial freedom. So when we talk about somebody who owns a business, right? They're not the traditional person that just needs to save and they've got to have some, like, kind of, here's my retirement number. How do they think about retirement? Or really, what options do they have to generate income for financial freedom?
Well, it's definitely a lot more complicated for a business owner because, like we've talked about before, you can't just snap your fingers and sell a company and say, boom, I have X number of dollars in the bank account now. And if the owner's intricately involved in running the business and their paycheck is tied to that, that makes it challenging. And the other thing is, I've learned over the years, owners are particularly suspicious about taking money out of their business and investing it somewhere. They
And rightfully so. I mean, I think they feel like they have control and they can control what happens to that money. They see their internal growth rate. And so I think we can understand why that's the case.
Sure. And things that you're not familiar with can seem a lot more scary than something you've done repeatedly.
Okay. So if you were to explain just in like 30 seconds, like, to a business owner that said, hey, I'd rather just reinvest in my business because I know I'm getting X% there, what would be the argument for saying, hey, maybe you should pick some money out and invest in maybe some of the traditional liquid markets that are out there?
Well, one argument is that you don't always know what the long-term future of your business will be. Just because it's doing well now doesn't mean it'll be doing well 10 years from now or 20 years from now. And so if you rely only on that, things can go awry. For example, I've got a client that owns a distribution type business that's oil and gas. It's a pipeline supply business. And he inherited the business from his family at a time that that industry and that business was worth millions of dollars. And gradually, what happened was, well, first of all, the oil and gas business is very cyclical.
Of course. Yeah.
Prices are very cyclical, but also other countries, as the economy has gotten more global, other countries, China in particular, has come in and started competing at very low pricing. And that's made the business less valuable than it was, say, 10, 20 years ago.
Hmm.
So what he had in terms of value at one point, it has actually dissipated quite a bit. So fortunately, he did put money away. He set up a 401k plan for his business and gradually did save money outside the company. And so he is fully diversified and he doesn't rely on selling the company for his retirement.
Yeah, that's great. So this is an example of the concentration risk that we were talking about on a different episode. Yeah, thanks for that example. So okay, let's take the person who they they take their business to the point of sale. They're ready to say, I'm ready to be done with this. Whatever they need moving forward, let's forget the numbers for a minute, but whatever they need moving forward, they're going to need to distribute money from this pot that they get from their sale, right? So how does somebody think about what they do with that pot of money? Like how do I how am I going to generate income from that? What does that even look like? Trying to help paint the picture to somebody because that can seem scary because it's like your last paycheck in a way, right? And so what do I do with that and how am I supposed to think about that?
Wow, that's a really good question there. And it's complicated because most people think, let's say I got $1 million and let's say my investments earn 10%, which would be a very aggressive goal, but let's just pretend that that's what my assumption is as a
We're using round numbers here, right? Yeah, just
right.
yeah, we're try to keep it even.
Then, well, I could spend $100,000 a year, 10% of $1 million, right? Well, no, it doesn't work like that. The problem is that when we invest, our values go up and down. And which is one of the things that's scary to business owners to begin with. What happens when you're trying to pull money out of that pile of money and we happen to be going through a bad year? And so we know from studies, very extensive studies, that a certain percentage is safe to be able to spend out of that pile of money if we think we're going to live 20, 15, 25, however many years after we retire or after we start drawing out of it. So we really have to look at some statistics and make some assumptions around withdrawals. It's easy for me to
Yeah.
say. Not just the rate of return.
Yeah, and the distribution of assets is a totally different calculation. There's different factors involved in the growth rate on the asset. Once you get into the area where you're distributing, it's completely different. And I mean, yeah, the original kind of pioneer behind this came up with a 4% being the rule. Now, I would now want to frame this and just say like this is a different number for everybody because how much risk you're willing to take, how much time you have to live on, or you're estimating to live on. All these things factor in to what your withdrawal rate is. Like where you are in a market cycle can matter as well. What interest rates look like. There's a lot of factors. So that's a very, very crude number, but at least it gives you a starting point on like what you could expect. So $1 million, that's 40,000 a year. And that may not seem like a lot. You start doing the math on how much wealth you need. Now there's plenty of ways to plan around that, but that's a pretty good way to start. So we just wanted to give context around that so that you can start doing some cocktail napkin math on like, hey, here's what I would need to sell the company for in order to generate the right amount of income.
Yeah. So speaking of income,
Hmm.
I think one of the first steps people ought to be thinking about is how much income do they need? And looking at things like how much am I drawing out of the business now, whether it's salary or just regular distributions out of the company. And another thing a lot of times people don't think about is they're using the business to cover some of their personal expenses. And I'm not saying in a not legitimate way. I'm saying, they might be having the business pay for their car or their cell phone and maybe some other expenses that are going to come back over to them personally after they retire or after they were to sell the company.
So you can say the picture is a little muddled on like how much you're actually spending, right?
Yeah,
Yeah, and from my experience doing this, and you probably have the same thing, is people really don't have a great idea about how much they actually spend.
no,
When it's usually much higher than somebody would just kind of like ballpark guess. If you just asked them how much do you spend a month, it's probably, maybe 50, 100 times more or 100% more than what they say. And so that's a really good exercise is to figure out like how much is actually going out the door and what do I really need? Because that's a number that you really need to know if you can be financially free or not.
exactly. Well, and then once you have that number, then you can apply some of these formulas we were talking about and saying, okay, if we know what your your lifestyle is. And I like to divide that into three categories: needs, wants, and aspirations. So,
Hmm.
needs are things like putting food in your stomach, making sure you have shelter, turn the lights on, have clothes on your back, things like that, the basics. And then wants are going to be, I love to go on 5 trips a year or be a member at a country club and I want to play golf 3 times a week. Um, those are the fun things that you enjoy doing that aren't, you don't have to have them, but you would like to have them. They're nice to have. And then the third one is aspirations, which are really things like giving money to kids, maybe helping them in ways beyond just basic education. Maybe you want to give them money to put a down payment on their home, or you want to give money to grandkids, or you want to do something for grandkids' education, or maybe you want to donate money to charity or make some big community impact. So really dividing things into those different categories so we really understand what wiggle room do we have if for some reason we don't have enough money to cover all those things, what are the highest priority items that we need to focus on? And
Yeah.
then figuring out backing into this lump sum number and saying, what will it take to generate that? What is that lump sum number based on our assumptions?
That's great. Yeah, and that really gives everybody a target on the wall. I think, a lot of the people that own a company are going to usually pretty motivated by goals and usually pretty good at running after that. So we can get a number on the wall to put on the whiteboard. That's a really good head start. So, yeah.
I always like to call that their magic number. What is figuring out what their magic number is so that they will have that financial freedom.
Yeah. No, that's great. That's a great way of putting it. I like that. Well, let's kind of transition a little bit and talk about what are some of the things that we can do to prepare for that day. So you talked a little bit about understanding your spending, going from there, but what are the next steps that we can take once we really kind of have our spending figured out?
Yeah, so if you figure out your spending and then you figure out what your magic number is, then one of the first things is to figure out how much is the company worth. And so having a business valuation done regularly, I suggest once a year, to determine how much is that number if I were to liquidate or monetize or sell my business. And then what have I done personally to build assets as well? So I look at my overall net worth and see how much that's going to fuel that income plan that we were just talking about. So
Yeah,
that
no, okay. Yeah, yeah. No, that's really good. And I know backtrack a little bit to what you were saying, but I think that the relationship between your spending and your net worth is a hugely important distinction because just looking at your net worth on its own is valuable. And you certainly can measure progress by seeing your net worth change over time, or if there's issues if it's going down. So it's a great way to measure like financial progress. But in terms of financial freedom, we need to know the spending side of that. We have to know the denominator in that equation to know. And I'm a big fan of like using metrics and trying to kind of approximate and just kind of measure where we are today. I think a lot of focus is spent in our industry, like looking out, 30 years or whatever. But sometimes we really want to know like, how am I doing right now? And I need like a legitimate way to figure that out. And so that's a good way to do it. Like if we usually say if somebody has about 25 to 30 times their spending in net worth, like that's approaching a financial freedom number. Again, it's a little different for everybody, but that's a good metric. So you just kind of figure if you can figure those two numbers out, what's your net worth and what you're spending, and you divide the two, it's a good start. And then, it's just like looking at your blood work when you go to the doctor. You kind of want to have a professional interpret that for you. But that's a good way, that's a good measuring stick to say, like, how am I doing right now? How much farther do I have to go to be financially free?
Well, I think one of the advantages of working with a financial planning professional is they help you test your assumptions. And so a lot of times you don't know what you don't know. And so,
Yeah.
we may kind of like you were saying, going to the doctor, you may assume, hey, I feel great, everything's fine. And then you do your blood work and you find out from your medical professional, oh, this number is not where we would want it to be. And so that's what we do as financial professionals is help people look at those assumptions and see if they're realistic. And if they're not, like let's say we figure out, okay, we've done a business valuation, we figured out our magic number. Those aren't meshing.
Yeah.
We're not there. And if somebody is thinking they're going to retire in a year, that's going to be a problem. If they think it's 10 years or 5 years or 15 years down the road, they've got some time to do something about it.
Yeah.
So then it's, what do you do about it? How do you fill that gap? And there's a few different ways you can do that.
Yeah, absolutely. That's a great point. Well, I think we've kind of hit on everything we wanted to in terms of talking about financial freedom. I just think it's a good topic because it really kind of connects the you know, what the end game is for a lot of people with their business. Like you're going to exit one day, whether you want to or whether you don't want to. There's going to be a reason for exit. We want it to be pre-planned and methodical and intentional. And thinking about like what that looks like from just like a pure dollar amount. Like, am I gonna have to make hard decisions when I do sell because I can't recreate the lifestyle I'm used to? Or can we build it to a point and be purposeful where we can be financially free at that point?
Yeah, I always like to tell people, a lot of times people assume that all wealth managers are about is investment management. And yes, there are a number of financial advisors that is all they do, but there are planners like us that they're thinking more in terms of that end game, like you're mentioning, and think about that in terms of like going on vacation. You're not just going to, like, if you want to go to Florida and you're going on a beach vacation, you're not just one day going to hop on a plane, say, "Oh, I think I'm going to go to the beach today in Florida and I'm going to spend a couple weeks there."
Yeah.
I mean, you could, but it's probably gonna cost you a lot more, and you might not be able to stay in the place you wanna stay in and so forth. You might have some unpleasant surprise along the way. That's not how most people do it. Most people think about where they wanna go, what they wanna do, the kind of experiences they wanna have, and why shouldn't our financial plan be like that? Why shouldn't we be thinking about what do we want to end up with at the end? And the investment management is like the flight to get us there. And so that's important, but it's not everything. There's so many more things that are important to consider first. And I think
Yeah.
as business owners that resonates because investment management a lot of times is a more foreign topic to them. So getting them focused first on their end game and numbers and where they want to end up and what their dreams are really can help them back into some of those practical steps.
Yeah. No, that's great. That's a great way to end it. Well, I'll let you have the last word if there's anything else you want to add.
Yeah, just I just say plan ahead and we're always here to help, and don't be afraid to think about financial freedom and what that looks like in your situation.
Yeah, that's a great way to end it. Great talking to you again, Holly. Have a good one.
Next time.
All right, bye.